to this late afternoon webinar, which is going to be the focus on cryptocurrency and the cryptocurrency market. And just a few practical things about the webinar. We will be, our moderator, Linda, she will join us soon. And we will be running questions during the discussion later on. So not only in a question and answer session at the end of the webinar this time. So, but if you have any questions, please put them in the chat, or you can also raise the hand and you can ask your question live, or if you prefer, just write it in the chat and we'll answer it live there as well. We are recording this webinar and there will be a link to this recording on our website together with a summary of the content today. At the end of the webinar, you also see a little pop-up coming up about a survey, and it would be fantastic if you could fill that in and give us your feedback on this particular topic, and also on other suggestions for topics in the future. That's really helpful for us to have. All right, so let me introduce our panelists. So we have Erik Wall, who is the Chief Investment Officer at Crane Assets in Sweden. We also have Henrik Andersson, who is the Chief Investment Officer at Apollo Capital in Melbourne. We also have Kalle Rosenbaum, who is an author, and he's a Bitcoin consultant at Propeller AB Sweden. So welcome so much. We're very, very pleased to have you here. It's an early morning in Sweden, and very, very glad that you could join us today. We will start with each panelist will have a brief intro first about themselves and the area they work in. So I will hand over to Erik, who is going to talk about the history and background about the cryptocurrency and also why it was invented. Erik.
I see that Linda just joined us. Hello, Linda.
Hi. Apologize for being a bit late.
It's okay, Linda. We have just done the introduction, and Erik is going to do the first 5-minute session here.
Perfect.
Yeah, so Camilla, you said that it's early morning here in Sweden, but the cryptocurrency market is open 24/7. And last night, a new cryptocurrency, which is a token of the world's largest decentralized exchange, just launched. So for me, it's a very late night here in Sweden still. So like Camilla said, I'm the Chief Investment Officer of a Scandinavian cryptocurrency fund, the only Scandinavian cryptocurrency fund. My background is as a technologist. I studied computer science at the Lund University, and I actually specialized very early on in blockchain technology, and I was lucky enough to discover Bitcoin as far back as 2011. And I have been a very enthusiastic member of the Swedish Bitcoin communities, but also the international Bitcoin community for a very long time. I've been a trader. After I wrote my master thesis on blockchain technology, I began working in the financial industry on the technology side. We built cryptocurrency exchanges, and in the beginning of 2019, we got acquired by NASDAQ. So I was working for a while with the NASDAQ blockchain team. I shortly left, shortly after they acquired us, I left to start my own thing, which is a cryptocurrency fund, which I'm now managing full time. But I wanted to talk about Bitcoin particularly here today, and why it was invented. And I think the easiest way for me to describe that is to talk about another work that I've been doing in parallel to all of this, which is I've joined the Human Rights Foundation as a technology expert on Bitcoin, because the Chief Strategist Officer of the Human Rights Foundation is very, very interested in making people understand to which extent cryptocurrencies can liberate people and bring freedom to the world. So if you look at the countries in the world today, where is Bitcoin right now more prominent than in other countries? And if you do the analysis, you look at the types of Bitcoin volumes that are trading per country, you'll see that the highest penetration for those who are transacting in and out of Bitcoin using peer-to-peer transactions are in countries like Venezuela, countries in Africa, and Russia. And these are areas which have very inhibited, very low economic freedom. So the idea is that if you live in Venezuela, you typically don't have access to the American banking system. So you can't use dollars in a digital form in Venezuela, and there's restrictions on how much dollars you can bring in and out of the country. Meanwhile, the central bank of Venezuela is hyperinflating the currency. So every 2 weeks, the value of the Venezuelan bolivar can drop 50%. So it's really difficult for you to just do the basic thing that you have a job and your goal is to just store your wealth. You don't want your money to disappear into nothing, and you can't get access to dollars. You can't move dollars out of the country. So in those types of areas, Bitcoin is coming into this arena and providing something that nobody can prevent you from doing. There's nobody in the world that can stop you from buying Bitcoin from someone and putting it into a hardware device, or just actually there's another way that you can access your Bitcoin, which is you just remember 12 words. And as long as you keep those 12 words in your head, then you can always access your Bitcoins. So you can store your wealth in Bitcoin in Venezuela, and then you can walk across the border and there's nobody that can find on your body these Bitcoins, because they're yours, and there's no bank or government official that can send out an order that will freeze your Bitcoins. Those Bitcoins are yours. So right now, Bitcoin has developed into a multi-$100 million asset class. One of the reasons why it is so valuable and interesting for people is that the money supply of Bitcoin cannot change. There's always going to be a maximum of 21 million coins. So it becomes comparable to an asset class like gold in the sense that it's scarce. It's something that the government can't manipulate. And where we are now in this unprecedented history of aggressive monetary policies worldwide, there's a lot of people that are seeking to invest in Bitcoin just as a means to escape the inevitable inflation that could happen. A lot of people are afraid that it will happen. So now it's coming up as an asset class that many people find to be as a digital form of gold. So just the way that you can have gold, store your wealth in gold, so you're not dependent on what happens with the central banking system. You can use Bitcoin for that, and it's digital, and you can transport it from anywhere you want in the world. So why I think most of us are here today is because we believe that we have invented a form of money that is superior to all previous monies that we've had in history before.
Thank you so much, Eric. That was such an interesting introduction. Thanks for that. I think we are going to move over to Henrik, who's going to talk a little bit about the market, the industry of cryptocurrency.
Yes, for sure. Thank you so much for having me here on this panel today. So my background is in traditional finance. I spent some 15 years in traditional finance. I started off as a quant at the bank in Sweden, and then I worked on the buy side and on the sell side in Singapore, and almost 10 years in New York. And I moved to Australia 5 years ago now, and in Australia I set up one of the first crypto funds in the country. I've got into cryptocurrencies 7 years ago. First Bitcoin, and I got really interested in Bitcoin, and then sort of I explored the rest of the crypto space, which is very diverse. Now there are a lot of different crypto networks around, and what we are really excited about today in the crypto markets is something called decentralized finance. So I just want to talk a little bit about what decentralized finance is and why we are so excited about it. So I think most of you have heard about fintech. Fintech is basically using technology to improve financial services. And it's been a darling among investors for the past decade or so. We have seen the rise of challenger banks like Revolut in Europe, which is coming here as well. And in Australia, we have a lot of so-called neobanks. We have payment processing companies like Square and Stripe. And we have post-purchasing companies like Afterpay here in Australia and Klarna in Sweden. And we have robo-advisors, and the list goes on and on. But if you actually look at these fintech companies, what they do, they're trying to sort of improve the higher layers in the stack in tech speak. They're trying to make the user experience better using technology, but they're still using the old legacy financial rails. So, you know, a robo-advisor might use AI to try to improve investment processes, but they will still invest in traditional investment vehicles. And the challenger banks, they sort of maybe are mobile only, they have a nice and shiny app, but it's, you know, it will still take a lot of time to send a payment, and it's not that much they can improve on the legacy financial system. And if I contrast that to decentralized finance, which is something being built with crypto assets and blockchains, it's very different, because with decentralized finance, we are building a completely new financial infrastructure from the ground up. So we don't have any of that legacy debt, if you like, tech debt. So we can build completely new networks that is open, accessible to anyone. So if you look at a few different parameters here, like the incentives for fintech versus DeFi, fintech, you can build a better user experience. In DeFi, you can actually reward the users using crypto economics. If you look at the structures, fintech is for-profit companies. We are now replacing that with software-based systems. If you look at kind of permissions to enter the system, fintech is still working in a walled garden permission system. What we are building in DeFi is open to anyone with an internet connection, which I think is very powerful. And if you're looking at what rails we are building on, fintech is building on the legacy rails versus DeFi, which is building on open blockchain, open accessible software. So if you use the words of someone like Peter Thiel, which is a billionaire entrepreneur in the States, he wrote a book called 0 to 1. And I think DeFi is a 0 to 1 innovation versus fintech, which is an improvement of the old system. So I think that's one of the reasons why we're so excited about DeFi. It's the first time, I think, in human history that we see permissionless innovation in finance on a global scale. And that's sort of where we see innovation happening today. Is a Cambrian explosion in innovation we see, and we ultimately believe this will lead to a better, a freer world.
Yeah, great, Henrik. That is such an interesting point of view. Thank you very much for sharing that. We will now move on to Kalle, who is going to explain a little bit more about how Bitcoin works and why this is the largest cryptocurrency.
Yeah, so hi. Yes, thank you. Okay, I'm a software developer. So I come from a very technical background, and I run a consultancy firm called Propeller, where we do programming services, education services for various Bitcoin-related companies. And I've also written this book called Grokking Bitcoin, which is available on stores, well, on online stores. But I'm going to talk about how Bitcoin works now. And Bitcoin is digital cash with three very powerful properties. So it's internet native, so it's as accessible as the internet itself. It has a limited supply of 21 million Bitcoin, and it's censorship resistant, which means unstoppable payments. And I will focus on censorship resistance here. The cash that we're used to are physical coins and banknotes. And this cash can be transferred peer-to-peer, and that means that there's no middleman. I can give Linda $1 and no one can stop that transaction from happening. But unfortunately, this only works in the physical world. All the digital payments, like MasterCard, PayPal, and your internet bank, etc., are operated by some central point of control that can censor transactions or even freeze and seize your money. And on top of that, these digital rails are only available for like 1 to 2 billion people of the world. Bitcoin is like cash, but in the digital realm. Anyone with an internet connection can use Bitcoin, and there's no registration process. You can just connect and use. I can use my, I'll take this off. You can just connect and use. I can use my phone to create a Bitcoin transaction that moves 1 Bitcoin from my wallet to Linda's Bitcoin wallet. And there's no central point of control that can prevent that transaction from happening. Instead, transaction processing is done by a network of computers that run Bitcoin software. We call those computers nodes. And a Bitcoin node does 2 things. First, it publishes new blocks. A block is a batch of new transactions that are to be appended to the Bitcoin blockchain. And the blockchain is the full history of all blocks that has ever happened, or all transactions that has ever happened. And you can view the Bitcoin's blockchain as the ledger, where each block is a page in this ledger. So that's one thing. The other thing that a node does is to verify blocks that it receives from other nodes. Most nodes will, however, skip the first step, which is publish new blocks. But those nodes who do step 1 are called miners. So miners publish new blocks. I will say a few words about the blockchain too. There's nothing special or magical about the blockchain. It's just a chain of blocks, starting from block 0, and every 10 minutes or so, a new block is appended to it. And every node maintains its own copy of this blockchain. And we now have around 650,000 blocks in the Bitcoin blockchain. Now let's go back to the transaction I made to Linda. I broadcast this transaction to the Bitcoin network, and miners will pick that up and put that transaction in a new block along with lots of other transactions. But to publish this block, a miner must first create what's called a proof of work, and that's a very time-consuming and costs a lot of computing power. So much, in fact, that it takes 10 minutes before any miner on the network succeeds. And the first miner who do succeed will be, and publish a valid block, will be rewarded for it with all the transaction fees from the transactions in that block, and also with a block, so-called block subsidy of newly minted coins.
Great.
So when Linda sees this transaction in a published block, she can be pretty sure that this transaction won't be reverted. And the more blocks that are built on top of that block, the harder it is to revert. So it would cost a lot for a miner to revert that transaction. So this is how Bitcoin achieves censorship resistance, by removing central point of control. I see you want to interrupt there, but I'm finished. Thank you.
It's very, very technical and very, very interesting. And I'm sure a lot of the participants will have a lot of questions for you. in regards to how this works. But I wanted to make sure that we also move on into the questions. And yes, so before I do that, and thank you so much, Kalle, that was very interesting. Thank you. I will just introduce myself really shortly, and I do apologize being a bit late. Sydney bus traffic is not to be trusted. So I am Linda Stanojevic, and I know Camilla throughout the Swedish community here in Sydney. And I have a background in Master of Science Engineering from KTH in Stockholm. And I worked a lot with product innovation and banking digital solutions within the big banks here in Australia, but also in neobank and startup. And I'm currently building a new Australian bank here, which is called Avenue. So that was just a short intro to me. Thank you very much, and sorry for being late again. I might just start moving into the questions that we have for these very competent panelists, Eric, Kalle, and Henrik. And I'm going to start with a question for you, Eric.
Yeah, just a question, Linda.
Yeah.
Can you see when we raise our hands using this?
I can. Eric, I see that you have your hand raised. Was it something that you wanted to add before we move into the questions?
Well, I just wanted to amplify some of the things that Henrik and Kalle said, but it's not super important. And if we are running late on time, let's just...
I might suggest that we start with the questions, and if it fits, just bring them in there. And now when we go on, just raise your hand if you want to jump into another question that we have that we're discussing.
Sure.
So this first question is, cryptocurrency have been criticized for having no intrinsic value because there is so many different types of cryptocurrencies and the barriers to entry is quite low. We have over 4,000 different cryptocurrency that exist today, and there can be more. In theory, if you could have an infinite number of different cryptocurrency with an infinite number of crypto coins, does that have an implication for the long-term value of cryptocurrency?
Yeah, so I think the important thing to remember is that yes, you can have multiple different cryptocurrencies, but historically speaking, Bitcoin, which is the largest cryptocurrency right now, has always been the largest cryptocurrency since cryptocurrencies were found out. And just these last couple of months, the dominance of Bitcoin with regard to the whole market, the whole cryptocurrency market, has been around 60 and 70%. So yes, it's true that there's probably always going to be this minority portion of the market where new inventions, new technologies are being invented to try to compete with Bitcoin. So if we think about how big can Bitcoin get as an asset class, and let's say that we imagine that the future valuation of Bitcoin could be something like $100 billion, then Bitcoin is probably going to capture 70% of that. And then the other currencies, the competing currencies, they will compete for the rest. And I'm not saying that it's always going to be that way. We could have a situation where Bitcoin becomes overthrown because another sounder money. I personally don't believe that it's very likely, but it's definitely a possibility that any rational person must have as a possibility in their mind. So this question really comes down to, do you believe in the concept of monetary convergence? And the concept of monetary convergence is that one currency, when it becomes more liquid and the network effect of that currency propagates and spreads, the currency actually becomes more and more valuable and useful. So the main property that we're trying to find in a currency is to find a currency that we can use to trade with as many people as possible. So you're most likely always going to have this consolidation around a single currency. I mean, that's why we see, you know, in Sweden we have the Swedish kroner, but it would be very difficult if you wanted to introduce a new currency and have that currency just be mildly successful, because when you trade with somebody, you want to trade in the same asset that they are trading, yes, so that you can make a transaction. So I don't see it as a big problem. I mean, the fact that there can be thousands and thousands of cryptocurrencies is, I think that's not the important thing. The important thing is to think about how large of a portion does the number one currency, how large portion is that number one currency going to attract from the overall. And as long as it's a high number, as long as it's not each coin gets 1% of the total market cap of cryptocurrencies, then we have a problem, yes. But as long as we have one that is major, big, that you can use, and that's traditionally how monies work, that we find one that we can consolidate on.
Okay, yeah, that's interesting look at. We also had a question coming in from the Q&A here, and that is, how big is the risk of manipulation of the Bitcoins? How so? I'm not sure how to say it. How so the system? So I guess the question is, how big is the risk of manipulation of Bitcoin? I mean, I guess looking at the blockchain, or if you can manipulate, or if you can create it. Does anyone? Is it safe? Can anyone?
Should I answer that? In
yes.
That case, well, I think the question that he's asking, will it be possible, for instance, right? We say that there's only going to be 21 million Bitcoin. Mm-hmm. And I guess his question is that, well, could somebody get into the system and change that? Well, I mean, it's theoretically it's possible, but the system as such is designed in such a way using a really an amazingly clever system using cryptography and game theory, and by running code on thousands of computers all over the world. Everyone that engages with the system uses their own Bitcoin system that validates all the rules. Mm-hmm. So if when I'm sitting here with my Bitcoin computer, if my computer detects something that's off, that the information on the Bitcoin blockchain deviates somehow from that protocol that my computer is running, my computer is not going to accept that information on the computer that I'm running. So the problem in Bitcoin is, if you want to manipulate the system, even if you can get to 1 or 100 or 1,000 of computers and manipulate the code that is running in those systems, it's not going to impact me, because I run the whole Bitcoin system locally on my computer. Now, what you can do is you can look at, okay, well, there are miners in Bitcoin, the ones that produce the blocks. There are some attacks that you could imagine. Let's say, for instance, that the Chinese government is able to take control of some of the largest Bitcoin mining farms. Then they can reorganize the order of which blocks are coming into the Bitcoin blockchain. Mm-hmm. We've had the Bitcoin system running for 11 years now, and that nobody has ever pulled off that attack. And there's so much money that could be made if you were able to do that. So I think we have the most definitive proof that it's at least extremely, extremely hard to do if you were to try. So those of us who analyze the properties of Bitcoin and the game theory mechanics behind it, we don't feel that that's a plausible threat, and we are working continuously every day to search out new attack vectors. I mean, the Bitcoin community is simultaneously the most dedicated scientific community at finding attacks on Bitcoin, and we find those and we patch them.
And you attack the attacker. Yeah. Okay, that sounds good.
I mean, it's the same thing with Android. Like Android, for instance, it's an open source system that everyone uses. And yes, it can be manipulated, but I mean, we have secure phones. We have secure phones. You don't get root access to people's phones and start hacking them.
Thank you. I think that answered Johan's questions, hopefully. Otherwise, just write back, and any one of you who are listening in, you can send Q&A questions during the session. Thank you, Eric. So now, yes, hang on. Kalle, you wanted to add something in here.
Yes. Yeah, I want to speak a little bit more about the gravity towards Bitcoin versus other cryptocurrencies. Yeah, there's the adoption that Eric talks about, but there's also the brain power that's invested in Bitcoin. Bitcoin is by far the biggest one, and it also has by far the biggest brain power of all the cryptocurrencies. And the smaller the cryptocurrency, the less people are working on those projects. And that makes them more prone to errors or privacy leaks or even scams. So I just wanted to mention that.
Thank you. Yeah, that's a great input. Thank you, Kalle. I'm going to move on to the next question, which is for Henrik. And that is, obviously, it's a good segue into this because we just talked about how many different cryptocurrencies there are in the market. So one question you might have is, if with that many different cryptocurrencies, why would you look beyond the largest cryptocurrency at all? Or, I mean, what's the drive for all of these cryptocurrencies to be created in the market when you have one that is so much larger than everyone else? Henrik?
Yeah, no, that's a really good question. There are, I think, 4,000 or 5,000 different cryptocurrencies in the market today. And we believe most of them will have very little value long-term. Most of them have no long-term merit. They might be copycats. It's very easy to create a cryptocurrency. You can do that very, very quickly. But I think there's a very, very low probability that there will only be Bitcoin long-term as well. So, and the reason for that is that these different cryptocurrencies, they have different functions. And we actually don't like to call them cryptocurrencies because they sounds like they're all currencies and you can only send value with them back and forth. We actually like to call them crypto assets, which I think is more wider. And if you look at something like Bitcoin, we believe Bitcoin is a type of a digital gold. Is a form of digital gold, or gold 2.0, if you like. It has many of the attributes of gold, and you could argue many of the attributes of Bitcoin are better than gold's. And gold is a $10 trillion market, and Bitcoin is only a fraction of that. It's very new. It's only 10 years old, while versus gold, which has been around for thousands of years. But that's Bitcoin, and with Bitcoin you can send value, you can store value, and you can keep it safe. With other cryptocurrencies, you can do other kind of transactions. So there is one crypto asset called Ethereum, for example, where you can do more complex transactions. I talked about decentralized finance before. With help of the Ethereum, you can do financial type of transactions that are more complicated versus what you can do with Bitcoin. There are other cryptocurrencies that have much more privacy than Bitcoin. On Bitcoin, all your transactions are open and viewable by anyone. There are one currency called Zcash, for example, that uses advanced cryptography to be able to create much more privacy. So there are different type of crypto assets out there that have different function in the system. So yeah, we probably don't need 4,000 or 5,000 crypto assets out there, but there will be more than just Bitcoin.
But that's very interesting. We just got a question as well, which is about Bitcoin, and it's from Ross, and he's asking, do the speakers see Bitcoin being a global currency in the future that could replace US dollars, say in 30, 40 years? Eric, what do you think, or who wants to answer it?
Yeah, no, I definitely see it that way. I do think that if you were just very objectively look at what are the most ideal characteristics a money can have, and what has made money, what has made other types of money candidates successful monies in the past, and you just look very objectively, then Bitcoin has the characteristics that make it the most sound money that I think the world has ever seen. And I am also seeing that in younger generations, Bitcoin has a lot better reputation, and people trust it a lot more than they trust the authoritarian governments and the current fiat banking system. So I think that the optics are improving in the younger generation, which will be, just by the way, there's going to be a tremendous wealth shift from boomers to the millennial generation in the upcoming years. So just from that fact alone, that the millennial category is going to become a much stronger demographic, it's going to push this trend forward. So it has all the merits, and I think it's starting to get all the optics now also. I'm personally just waiting for a time where I can get, when the Bitcoin price is stable enough so that I can reliably accept my salary in it. Once I do that, I will start spending Bitcoin. So I definitely see that there's a very good chance, and I certainly hope so, because I think it would benefit the entire world if we stop this sort of crazy monetary experiment that central banks has pushed us into ever since the end of the Bretton Woods standard in 1971.
Yeah, thank you. Thanks for answering that, Eric. Then I would like to move on to a question for Kalle, which is, we have different asset classes that appeal to different type of investors. And stock and bonds are bought by both retail and professional institutional investors. Investments in venture capital, private equity, and foreign exchange are usually done by professional institutional investors. What is driving the investment in cryptocurrency, and what type of investment horizon do the investor need to hold?
Yeah. I see different drivers on different levels. We have the individual level, we have the small business level, and big business level. So on the individual level, I think Eric panned it out quite well. People in less fortunate areas like Venezuela are in need of it. They need this money to do their day-to-day stuff. And we, as he said, we've seen a big uptick in adoption in these areas, and that's the main driver on the individual level, the need, and the investment horizon there is like very short, because they do it for the day-to-day stuff. And then you have the small business segment where I am. My own consultancy firm, our customers pay us in Bitcoin, and we pay out salaries in Bitcoin, and we store our wealth in Bitcoin. And now every now and then we need to sell off a bit to kroner to pay the taxman. But the driver here is probably convenience. We just find it more convenient. We do international trade, international business, and Bitcoin just works better in that environment. And our holdings are probably for a few years horizon. And then you have the big business. And I think they're starting to use it as a hedge against the US dollar in the stock market. For example, MicroStrategy is recently made a splash. It's a business analytics firm. They made a splash that they reveal that they have invested more than $400 million into Bitcoin, which is a huge majority of their stash. And this example might seem to be on the extreme side, but I think we're going to see more and more of this. And those companies invest very long term, like decades.
Okay.
So yeah.
Yeah, very interesting. Thank you for that, Kalle. And the next question is for Henrik. And I also have a very similar question that has been asked by one of the audience. And that is in regards to Are there funds EFT equivalent in the crypto market? If yes, are they viable investment vehicle considering counterparty risks? And we also have James that has asked a similar question. There have been discussions in the market about launching a Bitcoin ETF. However, we never seem to come to fruition. Do you see a Bitcoin ETF being launched in the future or not? Henrik.
Yeah, very good question. So yeah, traditionally there hasn't been many traditional vehicles to get exposure to crypto assets. One of the first instruments in the market has actually been in Sweden on the Stockholm Stock Exchange. There are a couple of big, not ETFs, but they're called ETNs, exchange trading notes, and they have some counterparty risk that comes with them. There are debt instruments and there are a guarantor behind them that guarantees the value of the instrument. So there are some risks involved in that. And the exposure you can get is limited to perhaps Bitcoin and Ethereum mainly, the two largest cryptocurrencies. There has been hopes for a long time that the SEC will approve a Bitcoin ETF someday. We haven't seen that yet. I think it will happen at some point when the market matures a little bit, maybe in a couple of years. I think within 2 years, I think we will see a Bitcoin ETF in the market. We have today Bitcoin futures and options trading on regulated exchanges, some of the biggest exchanges in the world actually. One is called CME, based in Chicago, which is the biggest derivatives exchange in the world. They trade Bitcoin futures. And also ICE, which is the owner of New York Stock Exchange. They trade Bitcoin futures and options. But apart from that, there is not that many alternatives for investors. So you could buy Bitcoin yourself and try to hold them safe, or you could invest if you want a broader exposure in a crypto fund, like Eric here is managing a crypto fund, and I'm managing a crypto fund here in Australia. I think those are kind of the alternatives in the market today.
Okay, thank you, Henrik. And that is actually quite similar to the next question that is for Eric in regards to exchange brokerage for cryptocurrency trading, and also to explain a little bit about cold wallet, if you need to have that and what it is.
Yeah, so that's a very fun question for me to answer, because I have a lot of personal experience with this particular issue. And I was in 2000, I said that I discovered Bitcoin in 2011 and I started trading Bitcoin in 2012. In 2014, however, I lost all my Bitcoins, every single one, because the number one Bitcoin trading website, which was called a Japanese Bitcoin exchange called Mt. Gox, they over a number of years had been a target and had been accessed by hackers who were leaking Bitcoins from that exchange over time, so that the admin of the exchange didn't notice that his exchange was becoming insolvent until it was too late. So it's very something when you use Bitcoin. We have a saying that we use in Bitcoin, which is not your key is not your Bitcoin. And that means if you are not the person who's controlling the cryptographic key, that is the access to you that you have. That's the person, the only person who can move your Bitcoin on the blockchain. If you don't have that key, then you are always at the risk that if you are trading on an exchange and you're using a custodian, there's always going to be a risk that they disappear with your cryptocurrency. Since Mt. Gox, I mean, this was in 2014, the industry has gotten immensely better at securing cryptocurrency assets. So I would say that it's a lot safer these days to trade on centralized custodians. But I personally don't like it very much, because if we're all using custodians for when we're trading Bitcoins, then these custodians get a lot of power. And one thing that we really, really need to make sure is that do these exchanges have the number of bitcoins that they claim they have? And there are audits that you can do to make sure that that's in place. We have one of the fantastic things that the Bitcoin system provides us with is you can as an exchange, you can cryptographically prove that you own the number of bitcoins that you claim you do. So that's called a proof of reserve test that you can do. There are a few exchanges who implement this, that provide these proofs on a monthly basis, and you can do it. You can verify it yourself using your own computer. It's a bit more challenging than that because you also have to demonstrate how many liabilities you have. You cannot only prove how much assets you have, you also have to prove the liability side, and that requires some manual auditing. But there's a cryptocurrency exchange called Kraken that recently received, well, basically a type of bank license so that they can start a special type of a bank, and that bank in Wyoming, the Kraken Bank, is going to be regulated at the bank. It's going to be highly audited, and they can legally not run a fractional reserve. So you don't merely, it's not a matter of trust. Here they literally cannot run a fractional reserve. So I think that Kraken is a very promising player, but the other players such as, for instance, Coinbase and Gemini, they also have very rigorous security practices these days. So I think it depends on where you are. If you're going to choose a cryptocurrency exchange where you trade, most of the time you probably want to use your local currency, and you want to be able to move money in and out of the exchange, the fiat currency in and out of the exchange very quickly. So there's usually one exchange that is very good for a particular region. For instance, here in Sweden, we have an exchange called TIO. It's not as well funded or as large as some of the international ones, but it allows you to get your money in and out more quickly using the local payment rails. And I think if you ask Henrik for Australians, then he probably also has a recommendation that he could give you. Personally, I use a number of different ones, but Coinbase and Kraken, I would say, are pretty secure places to store your Bitcoins at. And just the last part about the hardware wallet.
Yes.
Never keep, if you can, if you're not a trader, if you have bought Bitcoin, the next step for you in your evolution to become a proficient cryptocurrency user, get the hardware wallet. Then we get into that category where you can say, I own my own keys. That means you are the owner of your Bitcoins, or your other. You can store multiple cryptocurrencies on a hardware wallet. I use a device called a ledger. I also have a Trezor. That's something that can increase your security tremendously, and that's how you should store the lion's share of your cryptocurrency assets.
All right. Thank you so much, Eric, for that. Henrik, did you have anything to add? Is that different here in Australia, or is it the same?
Yeah, yes. First, this is what a Trezor look like that Eric talks about. This is a hardware wallet where you can store very secure your crypto assets like Bitcoin. In Australia, there are a few major exchanges that I personally would trust. One is called Independent Reserve, based in Sydney. There's another one called Mind Digital, and the third one is called BTC Markets. So those are some of the more trusted exchanges in Australia.
Okay. Thank you. Thanks for that, Henrik. I'm going to move on to the next question, which is for Kalle. And that is, beside the so-called stablecoin that is been specifically designed to peg their value against the US dollar, cryptocurrencies have exhibited extreme volatility over time. And I just did a quick look at Bitcoin here in Australia, and just in July it's gone up and down, $4 up and down. So it's obviously volatile. But the question is, do you see that cryptocurrencies such as Bitcoin would be stabilizing and behave more like a normal currency? If yes, in what time frame and why?
Yeah, I think Bitcoin will become less volatile as price goes up. A higher price means that Bitcoin accommodates more of the world's wealth. And the more wealth that's stored in Bitcoin, the harder it is to offset its price. But I think Henrik or Eric might have some more insight on that point. But it's not going to act like normal currencies, because normal currencies are designed to lose value over time. Central banks seem to have this fetish for positive inflation targets. Sweden, for example, has this goal of 2% price inflation per year. But Bitcoin is designed as a deflationary currency with its finite supply of 21 million Bitcoins. And I think this makes Bitcoin more like the world's only digital pie. So yes, it will stabilize, and no, it won't behave like normal currencies.
Okay, bit of dual answer. Thanks, thank you for that. Eric, you had something to add to the answer to that question?
Yeah. I think that when we're thinking about volatility and how it could likely decrease over time, I wouldn't say that it's as simple as saying, just because something is big, then it's much harder for the current. If the market capitalization is 10 trillion, I wouldn't necessarily say that it's that aspect alone makes it less volatile. I would say that the reason why when Bitcoin grows, if Bitcoin grows to be on par with something like a digital gold where it's valued $10 trillion. Now, what's going to, at that point in time, you're no longer going to have these people that discover Bitcoin and look at it and say, well, if I just pour all of my money into this, I can potentially make 100 or 1,000 times my investment, because those gains are gone. So when Bitcoin is starting to reach its destined or rational market cap, there's going to be a lot of less reason for people to act rationally and impulsively when they invest in Bitcoin. So that's going to cause the volatility. I mean, the gains, the opportunity, the moment in time is gone. So you don't need to be acting irrationally. You don't need to spend all your money to acquire it, and you don't have to be so scared that it's all going to go away, because by the time that we have reached such a large market capitalization, that's going to be a combination not only of more people understanding and learning about Bitcoin, but it's also going to be something that if we get that far, it means that we've probably knocked down, and if we've been there a while, we probably knocked down a lot of the regulatory uncertainty surrounding Bitcoin, because that's also something that causes the price to be wildly fluctuating. I mean, one of the things that causes Bitcoin to go up like 50% one week and then down 50% another week is that especially in the Asian countries, they ban Bitcoin, they unban Bitcoin, they ban Bitcoin. I don't think that they can, unless they really hate us, they're going to stop doing this at some point, and we're going to settle with something, and there's going to be more regulatory clarity. So the things that keep volatility down is how sophisticated are, well, how much do people really know about Bitcoin? So if they're less scared and they know more what they're doing, they're going to be less irrational. And if the gains and losses that you can make have also dropped, that's also going to make it more stable. And if the regulatory clarity around the currency as such is much broader, that's also going to bring down the volatility.
Thank you for that. It's interesting because from a banking view, it's very different, because you obviously don't have the same regulatory environment or the ability to trace where funds are coming from, and it's a very different system as a whole. I do want to take the opportunity to take a question here from the audience that we got from Theresia, and I thought it was sort of like a nice wrap-up question for the whole panel. And her question is, with the development of cryptocurrency, looking in the crystal ball, do you see traditional currency trading fading away? And will that going possibly also to actual traders? Do you see digital marketplaces, and in combination with AI and machine learning, that traditional traders, currency and otherwise, except like humans disappearing? It's a bit of a philosophical question.
Well, the first question was about, sorry if I just jump in here, but I think the first question was whether or not we'll see fiat currency, national currencies disappear over time, right?
Yes, that's the normal currency.
Yeah. I mean, that fiat currencies disappearing over time wouldn't be a new phenomenon. That happens all the time. And I think that the average lifespan that the fiat currency has is around 40 or 50 years. That's usually what it takes for one of these currencies to come along and try it out for a while, and something happens, you know, there can be political turmoil in that country, or the country just hyperinflates the currency to reach various political goals. So these constructs where you have a central government that is in charge of the monetary policy, they don't have a lot of, I mean, they don't have that long lifetimes, and that's what we've seen in the market. I think there's a much larger probability that something like Bitcoin can persist for a long time because the rules are predictable. There's nothing that's going to happen. Well, there of course are things that could happen to Bitcoin, but they're not as politically infested in that sense. They don't have the same type of the property of being locked to a specific country's economy. I think we're going to laugh about that one day. I mean, for instance, now I get my salary in Norwegian kroner, and then, you know, suddenly the oil prices drop, and the economy of Norway is doing poorly, and the 20% of the value of the Norwegian kroner just disappears overnight. Like, why would I want my currency that I'm paid in to be locked into this sort of niche, you know, unrelated to me problem that dominates the value of that currency? So I think that, yeah, I mean, we've discovered how to make currencies better now. We've understood what makes them fall, and yeah, we have something that's going to last us a very much longer time. So yeah. The second part of her question was about AI and machine learning in the forex market. I didn't fully grasp that question.
We are sort of slightly almost running out of time. So I don't know if Kalle and Henrik, do you want to answer that question in regards to, I think the question was in regards to if AI or machine learning would take over the trading from humans doing the trading.
Yeah, I think we're seeing that already for a long time already,
yeah.
for maybe more than a decade. So if you look at New York Stock Exchange, for example, it used to be full of people trading stocks there, and today is completely empty almost, and there's all machines trading. So definitely AI and machine learning and bots are taking over all kind of financial markets.
Okay, thank you. Kalle, anything to add?
No, nothing to add. I can't answer either of the questions.
Just checking. I mean, thank you so much. There was so much knowledge that just came busting out, all of your answers here. So I think the audience got a lot of information and a lot of good value out of this session, I hope. I did certainly get a lot of interesting information from all of you. So thank you very much. And I think hearing all, you are so involved in this industry, but from an outsider, I still see it as very volatile, but thank you so much for giving me more knowledge and understanding on how this interesting market works. Thank you so much. I might hand over back to Camilla.
Thank you so much. Thank you so much, Linda, for joining us as a moderator. And thank you, Kalle, thank you, Eric, and thank you, Henrik, so much for joining us. And also thanks to all the audience. I know that we didn't have time to go through all the questions, but we aim to do that after the webinar. So I know that Benjamin had a raised hand, so please just email your question or put it in the chat now. I just wanted to quickly show a little bit what's happening online within the chamber for the next few weeks. So I'm going to share my screen here with our upcoming events. All right, so you can all see that now. It's on the 29th of September, we're holding a webinar which is organized together with our equivalent in Sweden. That's the Australian Business Council of Sweden. And the topic on that one is going to be business and investment trends between Australia and Sweden in a post-COVID world. And for the webinar, we have the ambassador, Bernard Philip, who is the ambassador of Australia to Sweden. Oh, sorry, the Australian ambassador to Sweden. And then we also have Henrik who is the Swedish ambassador to Australia. They will be hosting this meeting. Next session is on the 30th of September. That's organized together with the Nordic Chambers, and that's going to be about renewable and clean energy. Then we have the 14th of October. We have a Women in Tech webinar. And for this one, we partnered up with ABB, and we will have panelists from Andersson here in Australia. And we also have panelists from ABB in Sweden, and also a representative from Sana Labs in Sweden. Moving on, we have a digital marketing course, which you might have seen information about. And that is it's going to be run over 5 weeks. It starts on the 14th of October, and it's going to be a 2-hour session from 7 to 9 in the evening. And the sessions are held by John Ekman, who is a expert within the area. So if you haven't signed up for that and are interested, it is still time to do so until the end of September. Then we're running an experience sharing session, which is a smaller session, and that's going to be, we had one on digital marketing a few weeks ago, and the next one is going to be on customer relationship management. More information to come about that one. Also, to let everybody know, we are still taking the entries for the Swedish Business in Australia Awards. So please visit our website to enter. And you can also find on our website all our information about upcoming events, and also follow us on social media, LinkedIn and Facebook. Thank you very much, and thanks all again for joining us this afternoon.
Thank you, Camilla. Thanks, everyone.